Good morning, traders. Welcome to our weekly Elliott Wave Street update. I'm Juan Maldonado, and it's a pleasure to share with you some of our views for this week. Don't forget that you can have the full analysis with all the instruments we cover on a daily basis with this video like this one, but with more instruments by taking one of our memberships at elliottwavestreet.com. You can find more details. This is the euro. Let's start from the big picture. This is the weekly chart. On the weekly chart, we have the price on the euro completing the first leg up of a three-wave sequence. We are in the corrective wave, and the main plan is to have a higher high back to the previous high. That's it. That's a simple plan. But the next question is if this corrective wave it's done or not. If it's done, the price is gonna make something like this and it's gonna continue higher. Actually, let's work with both the scenarios. So if the corrective wave is done, what we're going to see after this move up is a three-wave sequence, then a move up, then the corrective, and then the move up to the target zone of the 129. So that's the bullish scenario. If that's the case, I'm going long after this three-wave sequence for the long term right here. I will go long or at the breakout of the trend line, whatever. At the validation of the reversal, and this will be wave 1, this will be wave 2, and then we will go higher, right? And the bearish scenario that still is the main one is that the euro needs to move back to the low before going higher. So both the scenarios have something in common, that after the completion of this move, we're going lower. The difference in this case is if the price just makes a three-wave sequence, we're going up, but if it accelerates, we're going to make the lower low. So for both, I'm looking for a short trade. And then we will see. We will see if we activate the bullish one, whatever. We will see that during the leg down. So for now, for this week, I want to focus on finding the end of this leg. Of course, it's tricky. The institutional traders are going to do everything they can in order to provide us with traps, to make us make mistakes, of course, because that's their job. Their job is to make traps so we can sell before the drop and we can lose our money. So we have to be very careful doing this. Of course, managing the risk and being extremely careful with the setups. In order to have a better understanding of what's going on, it would be interesting to have a look at the euro from the volume profile point of view. So in order to do that, let me bring my volume profile chart. Okay, there we go. And what I'm going to do, I'm going to create a profile from the actual price, from the last swing. Look. So what this is telling is that we have this normal distribution on the euro, and it usually tells that it's starting to be attractive for the sell to go back to the point of control right here, and that will be actually really good if we have the leg down back to the point of control. And the question is when, right? So we know that in terms of value, we are at a good level and everything, but the next question is when, because this is not telling that the price is going down now. This is telling the price will go down here to this point of control, but before doing that, can go higher, or this could be the top. So that's the issue with these analysis techniques. And actually, they are providing a lot of value, a lot of information, but of course, something is pending. So when we go here to check the chart and now the strategy, to me it's important to cover the analysis with Elliott wave and volume profile, and then the strategy, how to trigger the trades, and then the tactics, how to manage the trade. So far, in terms of Elliott, we have 1, we have 2, we have 3. It's not enough for a validation. The price could very easily make a hard high. So here are the scenarios. If the price goes down here without moving above this high, of course, because that will invalidate, this will be wave 1. I will wait for 2 and I will sell it. And the other scenario that is making more sense right now is that the price is going to make a hard high. So that this was a 3-wave sequence, and we are going to have something like this. So if this is the scenario, I want to sell the euro here at the market top, at the reversal, at the double top, at the failure, whatever name you want to put it here, it will be the sell trade. All right, so we have a clear strategy. It's going to be tricky. The institutional guys are going to try to create as much traps as they can. Imagine all the people that are already short here with the stop loss here. That's a fantastic thing for the institutional guys. You know, this is the bait, and a lot of traders already are in the short trade. They have their stop above the high, and the institutions are going up to take them out, to take out the liquidity of the market. And if they perform this thing and then reject the price back to the area, that's where I like to sell. Because yeah, they can do it again, but at least I'm going to have a good price, so I'm going to have enough time to do something here. Let's have a look at the dollar. The dollar is going down. The dollar is already ended the wave 4. On the weekly chart, we have a target here at I have a target here at the previous low, that is the 89.07 area. So looking for another leg down. I have to reload my data, disappear the data, I have to download again the data. But anyway, the plan is to have a move back to the 84 area, and it's starting. Let's have a look at the S&P. On the S&P, I have a strategy for this week, a clear one. Let's have a look at the weekly chart first. I have a target for this year close to 5,000 area. Of course, it's not going to go directly there. It's going to have some noise. It's going to have a retrace. It's going to have corrective waves as always. And in the lower time frames, it seems that we're going to have a fantastic discount, or we are already having a good discount, because the price went up to almost the 4,200, a little bit lower than that, and now it's doing a corrective. It's 60 points roughly from the highs. And here comes the strategy. I need to have a lower low here. And listen, without moving below this pivot, below this low right here, that will create an invalidation. So if I have the price moving down here and then rejecting and going back, what I call a failure, this is going to be my buy entry. I like to accumulate SPYs. I like to trade the S&P long term, but of course with these plans you can do it short term, you can do scalping, whatever you like to do with the S&P. But I like these opportunities to accumulate for the long term. On the S&P, beautiful entry here. So that will be my entry. On the other hand, so listen and check this out. Price needs to go down and reverse, and here's the entry. And reverse. And reverse. If the price goes down and hits this invalidation, it's not going to be a trade. You see the difference between waiting for a signal and just trading because of wave count is a huge, huge different thing. All right, traders, so that's the strategy. Now I want you to go to ElliottWaveStreet.com, go to the membership tab. Under the membership tab, you are going to find our membership plans with the Forex, the stocks, and the full access. Now, there is something new on the memberships, and is the Members Academy. I'm building a fantastic course with basics, with important stuff about trading, with risk management, with lessons about how to use the wave counts. I'm adding every week one to two lessons every week till I complete the course. So far, I have like 4 or 5 lessons already in the website with quiz and everything, and it's included in your membership. So you can pick any of the memberships and you will get access to the live market analysis every day, plus the new Members Academy. All right, traders, please have a fantastic week. Make some good money. I'll see you soon. Take care.